Hello and welcome to Street View, May 2018. Today, we are dedicating our entire episode to what's going on in the market. We have lots of great materials to cover off, what's going on for sales, listings, price, interest rates. We've got a lot of exciting materials. We better get started. We're going to start today's market review with a simple recipe that we can all follow along. That's supply for a given area plus the demand equals the results, price, volume, etc. These are the things that we're going to break down into finer detail, but it's really based on the fundamentals of supply, demand, and the results that it creates. So starting with the supply side of that equation, here are the number of new listings for the month of April 2018. They were down 24.6% when compared with the year prior, and that's the yellow bar against the orange bar, which represents this month. We can see that it is this month's result, last month's result, is much more seasonally accurate with the 2 years preceding. But what was going on last year, 2017, that real big run up in the market, there was a flood of new listings that came to market in that time frame because peak prices were being achieved, and the market had already started to turn. And so this is a part of this story for today, is that we're in this transitional time frame. A year ago, the Fair Housing Act was announced, and the foreign buyer tax and then further interest rate changes and qualification processes were all to kind of flow from that, as well as tenancy laws. And we'll talk a little bit about that later. But all of these changes were happening at this time. But the number of new listings, the supply coming to the market, was somewhat in response to what was going on the months prior. And we can see how, there's always this run up, but it's not like last year. So now we look at sales, which is the other half of the equation that relates to demand. And we can see that sales were down 32.1% when compared with 2017. But when we look at March's results, just last month, the sales were down 39%. So last month, sales down 39%. This month, only 32%. So there is a bit of a trend there, but still slightly below the seasonal average. You can see how the orange bar is well below the 3 preceding years. So, it's kind of like, what's going on? Well, I think it's a bit of a continuance of this holding back idea that people have stepped away from the process. And, frankly, it's becoming a lot harder to qualify for a mortgage. And with house prices being what they are, even though they're not quite as high as they were last year at this time, the affordability is eroded. And we're going to get into that a little bit. So for sure, interest rate increases and mortgage qualification processes are part of it. But also, we take a look at another facet of the market because housing is so essential. What's going on with rentals as a good example? Well, the vacancy rate for condominiums, an easy benchmark for us to measure inside the Toronto Real Estate Board, is 1%. It's been hovering around 1% for some time. And regardless of the new tenancy laws that have got into place and rent control that's a part of that, still we're seeing rental rate increases in the double digits. So the average one-bedroom rental in the Toronto Real Estate Board area is up to $1,995 a month, which represents an 11.4% increase year over year. Two bedrooms are up to $2,653, which represents a 9.1% increase year over year. So it's interesting, as we see the number of sales dropping off for people thinking about purchasing, I think there are a good number of people that are shifting their focus to the rental market and trying to secure affordable rentals. And I think this is a natural occurrence that people have to have shelter. And so this is one of the facets how the market balances itself out. And now for the result. Hey, what's going on with price? So we look at prices down 12.4%. And once again, we can see how the orange bar is below the yellow bar that represents that number. But when we look at the prior month, a price differential was 14.3%. So last month it was a bigger difference, 14.3. Now it's only 12.4. And when I look at from March to April, just 1 month to the other month, it's actually up 2.5%. You can see how the orange bar is a little taller in the month of April. So, and that's seasonally normal. So really, this ongoing theme that we're experiencing very much a normal market with modest price growth. And it used to be, if we could have statistically like a 6% average price growth year over year, that was a much more sustainable market. And given that inflation should be somewhere around 2%, to have housing appreciating at 6%, still it's getting, the affordability is getting out there. But affordability is a little more complicated than that, and we're going to get into it. So this detailed result page is always a fun one to look at. It's split into sales and average price, and it breaks down the different home types along with the 416, the 905. And I want to cut this part a little more concise. Is that, this is very similar to what we've been seeing the 3 preceding months so far this year, that for detached and semi-detached, there's been slight fluctuations in price compared to last year, because the prices last year on those items were going up and now they're a little softer. But the one that really is interesting is to see how condo pricing is kind of maybe leveled off. It's just a little bit over 3% year over year. And that's people going to condo because there's affordability there, and because the average price is so much lower. And there's more to that story that we're going to share. And you can jump into where you fit in that matrix and see where you stand. I will say this about that. It depends greatly on where it is in the city. And it is not indicative of the entire Toronto market. There are pockets that are trading very close to last year's average, holding offer strategies, multiple offers, bidding wars as it were, preemptive offers. All of those things are going on in the marketplace, along with in condo. It's becoming complicated, or you must be nimble in the marketplace to seize an opportunity. I think it's a great way to put it. So, but it's a very interesting time. Pricing on condos is starting to maybe level out a little bit, and I think the inverse of that on freehold homes is the same. We've talked about this transition of making the jump condo to freehold. This is the market to do it in. These two numbers may not be this close for maybe some time, maybe not, we shall see. But let's take a look at the 3 key drivers that's mixing all of this up. And it has to do with interest rates, price that people are trying to reconcile, and the affordability that it causes. So let's jump into that. This is the best slide I've been able to find for historical interest rates, and it has the added functionality of breaking down both fixed interest rates and variable interest rates and how they've performed after the last 25 years. Very helpful if you're going through a mortgage renewal right now. So we can look at where the chart begins in the early 1990s, coming out of the last true Canadian recession, where interest rates were well over 10%. And we can see the fluctuations in the market as it wore through the 90s and got into the early 2000s. And then we can see interest rates take a dive right in the early 2000s. And that was the dot-com era. And that's when things weren't so much fun. And the technology, Y2K and all of that sort of stuff. For those of you that are old enough to remember that time, yeah, in the markets it was turbulent. Then moving into what was very much a growth phase that ran right up until 2007, we can see interest rates were growing gradually over that time until we ran into the subprime fiasco and the worst global economic recession that we've ever seen. And then what happened? Subprime drove the market down, and then Canada responded with dropping its interest rates, and they went down in 2008, 2009. Well, what did that do for our market? Well, that made money very cheap to borrow. And so, from that time, you can see how there was actually an uptick in 2010, 2011, when we thought that, the economy was doing well and we were set and we were maybe going to see interest rates climb, but not so much. We got to a point in 2014, 2015, where we saw some reductions again. And that's fueled a lot of the growth that's happened through to today, where we can start to see a little uptick coming right at the very end. And during that span of time, I want you to pay particular attention to what was going on here in interest rates and how it relates to the next slide, because we're finishing off here with prime interest rates at 3.45. And that's a journey from like around 11% all the way down to 3.45. And so let's see how that relates to price. It is average price since 1995 in the Toronto real estate zone. We can see how the corollary, as interest rates went down, what happened to price? Yes, slow, steady growth. Hey, let's take a look at 2007, 2008. We can see there was a little dip in average price with the worst global economic recession we'd ever seen. Canada weathered that storm very effectively. And then we can see how, price was moving up and down as it normally does, coming right through until we got to January 2015. What happened there? Interest rates took a little dive, you remember from the previous slide. And they hung in there nice and low. And then what happened with price? Price just took off. It just poof, went right up. And then what happened? Interest rates went up a little bit. And then boom, it comes down again. Isn't it funny? Those two are, it's like the gas and the brake, in the housing market. So when we see interest rates going up, that's going to cause softness in price eventually. And it depends on the supply inside the market, and we've already talked about that. But both of those things have a third factor, and probably the most important one. So let's take a look at that. And so here it is, the affordability index, which takes the average household income applied to mortgage costs, utilities, and property taxes for the average home inside Toronto. And we can see this chart begins in 1986, and it includes the run-up in affordability costs in the last true recession that we experienced in the late 80s, early 90s. And we saw from the interest rate slide how interest rates started to fall from the double digits we saw at that time, and that made housing more affordable. In addition to that, housing values had corrected, and the housing price chart started in 92, and it was that long sweeping curve since then. And we can see how this relates. We can see how the peak came down, and then in the 90s, the affordability just slowly kind of hovered around the bottom, hovered around 30%. Got a little bit below 30%, a little bit above 30%, but then it started to climb upwards to closer to 35% in 2007, when we saw the subprime market correction. Then what happens? Interest rates went down. Housing prices corrected a little bit, so the overall affordability did dip there, meaning it was more affordable for a home. You know, a lower bar is a good thing. Then what we've seen since 2007, with some minor deviations, but really we've seen this progression of home prices going up, interest rates staying low. And it's not until we started to see interest rates climbing up have we started to see pricing, you know, maybe level off, correct a little bit. But now look at where the affordability is sitting. It's at 40%. And so the challenge there is that that's the number, 41%, is what the banks use to qualify you for a mortgage. They take up your average income and they say 41% of your gross income can be allocated towards mortgage, property taxes, utility costs. And so that gives you the size of mortgage you can apply for, and then how much cash you have in hand. Add those two together, that's the kind of house you can afford. And the average home in Toronto is $804,000. So there's a question there. If your income isn't growing fast enough to keep up with the price growth, then you have to do what? You have to shift location or find homes that are more affordable for yourselves. So condo, as a matter of fact, can be an option. Can't afford that 3-bedroom semi that you really want to have? Then you got to go maybe to a 2-bedroom house, or maybe 2-bedroom house isn't achievable. Well, now let's go to a 2-bedroom condo. And you know, there's a little bit of this influence for the empty nesters. They're selling off their assets because they're saying, okay, the housing prices are near a peak. They're real good. And you know, transitioning to condo, and what do they want? They want large format condos, 2-bedroom condos. So those factors have been influencing condo values. So I think it's very, very interesting to say this, that we are near the ceiling of affordability. And unless people start making a lot more money on the income side, or we see interest rates go down, price growth will be moderate. I'll say that again. With these other factors remaining static, price growth is going to be moderate. And that's what I foresee for the balance of this year. We've hit our ceiling limit, so our affordability limit for most of us. And so the banks are becoming tighter about their lending practices, and so therefore we are really kind of at that optimal level, if you will. So where we go from here, we're open to major market corrections, I suppose, and we're in an election cycle for the province of Ontario, so who knows where that's going. I trust that you found this very informative and helpful. Madeline and I remain here to help any of you with the inner workings of buying or selling real estate, and we're never too busy to have a consultation. So with that, I'll wish you well for this month. Thank you for watching, and I'll speak to you again very soon.